Hello traders, James Stanley with StoneX and Forex.com. Something finally happened this week that I've been waiting for a couple of months now. And I'm not somebody that's looking to get bearish in gold. I'm not looking to get bearish in silver. But something that I have been looking for is what I call the gold replacement theory. It's something that we've seen happen a few different times in the very recent past. We saw it in the summer of 2020. We saw it again in late 2024, a couple of times last year in 2025. And that's when gold prices have gotten so overbought that market participants have replaced it with Bitcoin. Bitcoin broke out in a really big way this week, and I think there's an open door for a test of 100, maybe even more. And I wanted to look at the structure behind the move to see how we might be able to move forward in a somewhat strategic manner. I'm not somebody that goes for the spray and pray type of approach or the chase a move and hope that it works out. I need to see some structure. I need to see some technical build behind a move before I could actually get anything resembling an entry or strategy around it. So let's get to the chart. Let's look at what we're dealing with, and let's dice this up from a few different directions. So first and foremost, on gold replacement theory, the shining example to me is what happened when gold first began to test the 2K level in the summer of 2020. Now, if you remember what happened then, we were in a global shutdown. We had liquidity cannons at full press globally. And there was every reason in the world for gold to break out. And that's when it finally was able to push up to that 2K psychological level. 2K was like a mythical figure in gold for a long time. If you look at what happened back in 2011, a parabolic move that just stalled at like 1920. And, you know, my contention is the reason that stalled just ahead of the 2K figure is because the risk reward was askew. You get $80 away, $100 away from the 2K handle, and your most recent swing lows all the way down to like 700. There's not an attractive risk reward to chase the move higher. And when it's so stretched, there's like the very logical idea that it's at least going to stall. And it becomes somewhat of a self-fulfilling prophecy. We stall before we even test the big figure. That leads to profit taking, a pullback, lower highs, lower lows. Before you know it, highs in place, and that then lasted for like 8 or 9 years. In the summer of 2020, however, we finally had a fundamental backdrop that allowed bulls to throw caution to the wind. We finally got above that 2K handle. But 2K, major psychological level. Once we got above that price, you had a lot of longs that were loading the boat at 1,200, 1,300, 1,500, and maybe even some that were holding from that first wave. And they wanted to take profits. All of a sudden, 2K comes in as resistance. Now, if we look at what happened then and where Bitcoin was, it was struggling to get back above the 12K level. Gold held that 2K handle for like 3.5 years. It didn't finally break out until early 2024 when it showed a support and then broke out in a very big way in Q1 of 2024. But if we look at what Bitcoin was doing at the time, the same relevant period of time, you can see right here, I even have this marked in this monthly chart. Bitcoin was struggling to get back above 12K the first time gold hit 2. And as gold ranges, Bitcoin breaks out in a very big way. Hits 65K, then 69K. And it's almost as if it was the gold replacement theory. You know, and so interestingly, from an actual usage standpoint, you see replacement come up when gold prices get expensive. And then any like actual usages for gold will look for replacement metals that aren't as expensive, thereby softening demand. Well, in this case, I'm looking at this purely from a fiat currency hedge perspective, and it's almost as if the world's flavor for anti-fiat vehicles shifted into cryptocurrencies in 2020 and then 2021. And that argument held fairly well all throughout gold ranging, holding resistance at that 2K handle for the next 3.5 years. What brought this back to life is what started to happen, or what started to show as gold prices began to calm as gold prices began to calm in late 2024, specifically right in here. And then there was a couple of periods last year in 2025. Now, in late 2024, and the sequence that went on here, gold struggles to get that 2K acceptance early in the year. It traded below 2K for literally just 2 days. There was a comment from Chicago Fed President Austin Goolsbee the day of a CPI print. Let's not get all flipped out about one CPI report, which seemingly showed that the Fed was willing to look past high inflation because they really wanted to cut rates, which is something that is bad for real rates and in turn positive for gold. And you can see that 2K support comes in, and then we launch. We launched all the way and continued to rally until we finally hit this high of 2790. Now that 2790 high printed just like a week ahead of the U.S. election. Right in here. And once again, gold goes into a pullback. Now at the time, there wasn't anything different on a fundamental front. Like, it's not as if Trump was coming in talking about balancing the budget. It's not like he was talking about issuing less debt. Nothing changed from a fundamental perspective. Fed was still cutting rates. What did shift, however, and look at this date. This was October 31st, 2024. What did shift is, once again, the world's flavor for anti-fiat vehicles. Again, that was October 31st, 2024. You look at what Bitcoin's doing, and it's just now starting to break out. It's starting to break that prior high, that 69K high that was right here. We get into that sequence right there, right when gold begins to top. And then as gold is pulling back, Bitcoin comes to life in a very big way. Now, the driver here, it really felt very obvious because Trump had run on a pro-crypto platform, and you can see where Bitcoin gets its first ever close above 90K and then above 100K. Again, it was almost like the world's flavor for its favorite anti-fiat vehicle shifted over into Bitcoin from gold. One last instance that I want to tell you about, then we'll get to the current day setup. And that setup was for 4 months last year. Gold hit this high of 3,500 and then digests. It builds a beautiful bull pennant formation that lasted for the next 4 months. Almost 4 months exactly. Because we hit this high on April 21st, or excuse me, April 22nd, which was just after Easter Monday. And we began to break out on Friday, August 22nd. That was when Jerome Powell gave a speech at Jackson Hole, finally indicating that he might be open to cutting rates. And you can see what gold did. It went parabolic. But examine what happened here from April 22nd to August 22nd. Again, go back to Bitcoin. April 22nd to August 22nd. April 22nd right here was a very big day. This was the day that gold topped, the day that gold hit that 3,500 print and then reversed. Bitcoin breaks out again in a very big way, 90K, and it runs all the way up to 120. Eventually got that 125 handle in October. But in that run, from April 22nd to August 22nd, as gold is digesting, as gold is pulling back, Bitcoin's breaking out in a very big way. Again, gold replacement theory going into Bitcoin. So when I saw gold getting overbought again in Q4 of last year, I started to look for Bitcoin to make that move. It didn't happen. Instead, that showed up somewhere else. That showed up in silver in a really big way. And that still is showing up in silver. You can see we hit a fresh all-time high again just yesterday. And the problem with that is that we're so overbought that chasing this is really, really daunting. So again, I don't want to go short. I don't want to look to trade reversals here. I went over a possible reversal setup last week in a double top. It didn't trigger. Nothing filled in. We just broke out and ran up to another fresh high. But we might be in that spot where, like we saw in the summer of 2020 and then in 2024 and then twice in 2025, gold is so overbought that maybe we see those flows shift elsewhere and into a market like Bitcoin. Now, what's happened to Bitcoin recently is prices got absolutely cleaned out in Q4. We had that 125 level that hit, and notice how beautifully that traded for like a 3-day sequence. until eventually we pulled back, sold off with aggression. And it continued to sell off. There were a couple of bounces along the way, even from levels that I looked at in these videos, but sequencing of lower lows and lower highs throughout. What shifted, and the reason I'm even recording this video right now, is now bulls have an open door to make a push, to make a run at that 100K level. Now, 100K is a major spot. That is where I'm expecting a pretty big fight to go down. And it doesn't necessarily have to favor bulls. Notice we caught support on the way down over like a 4-day sequence before sellers were ultimately able to take it out. And it's not the first time they showed a support. But I think what's going to happen is once we get up to 100, I think there will be some profit taking that shows up. And so that's not the move that I want. The move that I want is what happens after 100 trades. I'm going to go over to this chart. It's a little bit more detailed. It's a little bit more messy. But what we're looking at here is an ascending triangle formation. This ascending triangle comes from a couple of different spots. We have this support into resistance, resistance again, and we've since broken out. We have higher lows. And the ascending triangle is a bullish breakout formation because of those higher lows. It's essentially saying we have this horizontal level, this line in the sand that bulls have not been able to get above, and it's bringing diminishing marginal impact. This resistance hit brought a pullback to 85. This resistance hit brought a pullback to 90. The next time we went up to resistance, we slipped right through. Sellers were no longer able to defend that level. And so now we got the fresh higher high to work with. But where the trend is made is on the pullback and the higher low. So at this point, I have two different spots of support that I would like to see hold, and I have a third that I'm looking at as invalidation. Let's just look at the third for invalidation first and foremost. That's at 90K. And the reason that's invalidation is because we had this resistance turn support right at the big figure. And notice how cleanly that held into this week. That's what launched us into this current high. If we get a closed body break on the daily chart below 90K, this is failure. It didn't work. So that is invalidation. That's what I'm looking at as my S3 level. My S2 zone is simply what I'm identifying as horizontal resistance from the ascending triangle formation. And I'm plotting that from 92,929 up to 93,961. Big spot, big zone. It's a little over $1,000. So it could get a little messy in there. Like we could get down and we could see a reaction at the bottom of the zone, or we could just see a shaving at the top of the zone. I don't care. What matters to me is I want to see an underside wick showing bulls respond to that support. At that point, I get an open door to take a shot to look for continuation. And then, ideally, it'd be that 95K level. Like, if we see prices dip down to 95, notice it's come close. It hasn't quite gotten there yet. But if we get price to dip down below 95, and then I see buyers react, showing an underside wick, thereby showing a reaction, then that's something that I can move forward with, saying that buyers defended the level, the door is wide open for a 100K test. But what happens if we get a 100K test before we get a support pullback? Well, same thing. I don't want to chase this at 100. And so I need one of two things to happen. I either need that breakout to continue to run all the way up to a 105, or this level here, 107,389, which I like quite a bit because this was support over a few different days, and then it showed up as a perfect kiss of resistance on November 11th before this trend went really upside down. But that is a major spot. I would like to see, in the bullish scenario, breakout beyond 100 to 105 or 107,389. And then I look to play a pullback. If we get 107,389, I could even look at a pullback and support at 105 or 100. One of those two levels. If it's just a rally up to 105, then I could look for a pullback to 100. If we do get a test, a resistance test at 100, the same three current support zones, current support areas, are the spots that I'm going to look to pick on. 95 would be ideal. 92,929 up to 93,961, or 90K, which is invalidation, and also confluent with this bullish trend line Sunday to Monday. Now, as to whether or not this comes to fruition, it's like any other setup. You never know. But the whole benefit behind this is if I can get support, if I can catch a higher low, then I'm essentially going to look for 2 to 3x whatever my risk outlay is for that trend to run. And then if I get this running above 100, 105, maybe even 110, then that reversal theme is going to look really very attractive. Still in the early stages, but most big things have small beginnings, and that's where we're at right now on Bitcoin. Thank you for your time, and as always, happy trading, ladies and gentlemen.